Leveraging an IP holding company. Hello and welcome back. This is John Cronin, Invent Anything. In this episode, we'll cover the strategic advantages and future potential of IP holding companies. We'll explore how these specialized entities help businesses centralize the ownership and management of IP, including patents and trademarks, while offering some very critical benefits like asset protection, tax optimization, enhanced monetization. We're going to learn the essential steps in setting one of these IP holding companies up, from selecting trustees to defining license agreements, etc. We'll also discuss how the IP holding companies streamline things like R&D, facilitate mergers, and protect assets from legal risks. And finally, we'll look at the future of IP holding companies, looking at the cutting-edge developments like blockchain and AI-driven valuation. This episode is packed with insights for those looking to understand IP holding companies. So stay tuned.
Inventions keep the world spinning. From fire in the wheel to today's high-tech, inventions power change. Turn your inventions into reality. Learn how to get your ideas to market. This is Invent Anything with John Cronin.
So today we'll cover 6 topics. The first topic is, what is an IP holding company? Get some definitions and make you aware of what it is. And then we'll talk about topic 2, which is to set up an IP holding company. How do you do it? And topic number 3, we'll hit the benefits of a IP holding company once it's set up. And in topic number 4, we'll talk about the things to watch out for in IP holding companies. Topic number 5, we'll talk about the strategies of IP holding companies. And then in topic number 6, we'll talk about the future of these IP holding companies. And I chose these 6 different topics to try to give a high-level coverage. There's a number of points under each topic, but there's a lot more to talk about. So consider this podcast sort of a primer on it. Every time I start to work on a podcast, I start to think about what would be the audience for these. And I think obviously for anybody interested in IP strategy would certainly be interested in an IP holding company because it's a very unique IP strategy. But for those in small companies who want to enhance their M&A position, believe it or not, IP holding companies may be the way to go. For those in larger companies, you might get the insight into this counter strategy of how people set up IP holding companies to leverage the smaller company. Not to say that larger companies have not set up IP holding companies, but in general, most of them are smaller companies. If you're an investor, this is definitely for you because you might want a way to enhance your investment, and IP holding companies certainly do that if your investment has IP. There might be ways to sort of think about IP from those who may want to be considering starting one. So this podcast is definitely for you, thinking about, if you want to start one. There's a lot of facts and insights here that would give you the basis for figuring out whether to start on the path of starting an IP holding company. And for those who already have an IP holding company, I think this podcast is for you as well, because it may uncover things that you might not have known. So this is John Cronin, Invent Anything. And coming up, what we're going to discuss is the strategic advantages of setting up an IP holding company, from enhanced asset protection and tax optimization to streamlining IP management. But we'll also explore how businesses can centralize intellectual property ownership for greater control and value. We'll also touch on some key considerations for structuring the IP holding company, including how to prioritize the assets, evaluate the opportunities for licensing and monetization, and how we build a solid foundation in the IP holding company for the future. So if you're looking to protect and maximize your IP or potential IP, this next section is for you. So let's get involved in talking about topic number 1, what is an IP holding company? And first of all is figure out, what is the purpose of what an IP holding company is. It's really a legal entity that's created solely to manage the IP assets. And this is done generally from a company called a parent company or original company. It has IP and it wants to take the IP out of its company and put it into a holding company. And the only thing in the holding company is the IP. But the parent company would get a license back, many times an exclusive license back with some great terms, but also the IP holding company might go on to try to monetize the IP in different directions, different markets, against competitors or customers, and it might do that, and there'd be some revenue share between the holding company and the parent company. So if you take a snapshot of the parent company with their IP, from that we determine, how many patents or what would go into an IP holding company. The next thing is, this is generally done for asset protection. You see, by isolating the IP in a holding company, what happens is that the parent company, operationally can now focus on what they're doing, and the IP company can actually focus on IP and asset monetization. So it's a great way to kind of separate the functions, because a lot of times, quite honestly, when a company's trying to manage both their product and market and their IP, it becomes a lot of conflicts, like how much money do you want to pour into the IP versus R&D? By separating these two, those discussions no longer occur. Another thing is tax optimization. So another thing that IP holding company is put together for. And what happens is you can have tax-friendly jurisdictions, allow the business to reduce its overall tax liability, and royalties and fee paid in the holding company are often deductible now versus in an operating company. So basically, there's certain tax advantages on both sides of the parent company or the holding company. I'm not a tax accountant, but I think there's, just some common sense things, but putting the IP in a holding company, it now is its business. And therefore, anything about IP relates to its business from an expense side. So you can then write off those expenses against the IP development. A lot of times that's difficult to maneuver in a product company. Another thing about IP holding companies is licensing and monetization. This is actually one of the cornerstones of an IP holding company. Basically, if I have a IP holding company with patents in it, for instance, I can go litigate against someone, and the IP holding company has no products, so there's no counter litigation. It's kind of immune, to be counter litigated. And that's a real strength, because if the patents were in the product company and the product company, the original company, litigated, then you might see countersuits against that parent company. So this is one of the fundamental benefits of an IP holding company. Another benefit is that IP holding companies provide sort of evaluation enhancement. By centralizing the IP assets in a holding company, it starts to improve the value of the holding company. So because it provides clearer visibility of the patent valuation, because the patent valuation in a parent company, if you have patents, is kind of fogged up by the value of the company itself. If the company's doing really well and the patents support it, that's one thing. But if the company's not doing that well and the patents support that direction, you might say that the patent valuation can't be high because the product company's not making much value out of it. But on the other hand, when you put it directly in the IP holding company, what you find is that by itself, it's the only thing to value. And so when we're valuing that, we can have a very clear focus of what the valuation is. One of the huge parts about the IP holding company is what I'll call strategic flexibility. Here, you're providing sort of legal and operational flexibility for the holding company. It can do things, through its management and operation that maybe the product parent company would never do. It could take certain risks. It could buy IP. It could develop more IP and then use it for a licensing and litigation model for monetization. And make it immune to the product company. So there's a lot of flexibility. The other interesting thing, which a lot of people don't understand about IP holding companies, is that the parent company basically owns a big chunk of the holding company. And because of that, they can direct what the holding company does. In other words, the parent company could get in a situation where they want the patents to be litigated against the main competitor. They can then direct the IP holding company to do that. One of the things about an IP holding company is the real clear understanding of the IP in the holding company is really centrally managed by the IP holding company. This simplifies lots of stuff, the administration, the facilities, the strategy, and all that stuff. When you're just focusing on patents, there's no debate at the board of a product company about should you hire a licensing executive or not, because certainly an IP holding company you would without any question. Another thing is that there's financial benefits to an IP holding company, aside from the tax advantages, which enable the businesses to recognize their IP on their balance sheet. So in a product company, recognizing IP in a balance sheet, again, could kind of fog up the overall value of the assets and liabilities of a product company. But the only assets and liabilities we have are in the patents and holding company. So once again, it's a very clear separation of where value is. And by mentioning separation, there's another interesting thing about a holding company, is that you separate all the operations. So all the IP, the paying maintenance fees, the doing office actions, the development of further IP, licensing, monetization, litigation, that's all done in the holding company, which means that the holding company starts to develop that expertise, whereas the product company then can focus on its products. And finally, one of the things about an IP holding company is it can uniquely move across the globe because it's set up as an IP company. So you could create patents in different jurisdictions and then go license them in those jurisdictions or even sell them. The original product company might never do that because its products might never find the business case to be in another country. So global expansion is certainly another thing. So it's giving birth to the IP that the parent company has to actually put it in an entity, to be able to expand it in that entity and be able to strategize in that entity and be able to monetize in many different ways all by itself. Well, if that's sort of what an IP company is, then the question is, how do we set it up? Now, I'm going to provide here, I think, 10 points of how this is done, some aspects of it. But when you're setting up any company, of course, there's everything you can imagine, the name and hiring lawyers to set it up and investment in it and all that stuff. I really want to focus on specifically IP holding company differentiating itself from just setup of any company. So the first thing is that you need to do a strategy on the IP. You need to figure out how good it is, and what's the pros and cons of creating an IP holding company to begin with. I've mentioned some of the positives, but there certainly are negatives. And we'll talk about that in topic number 4. But, what you want to do is sort of weigh the costs and the benefits of setting up a separate company, because the key IP of the parent company will no longer be owned by the parent company. It will be licensed from the holding company. And what does that actually mean? And legally, it means a bunch of different things for the parent company. They may have to require from the holding company to, monetize the IP for the benefit of the product company. But the nice thing is the IP holding company is primarily owned by the parent company and the investors in it. So there's a lot of potential to make those contracts, stick really well. So a second thing of setting up an IP holding company is what I might call graphical planning. I'm actually working on this right now with the company. It has some base patents as a product company. It's spinning that base patents into a holding company, but it wants to then create separate holding companies in separate markets, like, one kind of product market, say medical, and another one like security, etc. So this gets to be even more confusing. It's more than one holding company, it's separate. So by graphically planning with circles almost, here's the parent company with its patents. The next slide is, here's the parent company with its holding company. Then the next slide is the holding company set up and the patents go over there. And then you start to develop the circles of the monetization paths of the holding company, litigation, licensing, sale of IP, etc. So you could start to see how that holding company develops. So the next area to talk about setting up an IP holding company is what I call graphical planning. It's very simple in one sense. What you do is you have the parent company in a circle, and then next to it is a circle of the withholding company, showing the patents in the circle of the holding company. But then using other circles under the holding company to show some of its activities, like maybe starting another company, creating even a second holding company or third, or creating patent monetization or patent litigation. So you can start to see the functions of the holding company. And this is important because you can start to clearly discuss point number 1, which was, should I set up an IP holding company? And you need to take it out of just general discussion and kind of map it as a business. And since the only business it has is these assets called patents, you might have separate holding companies on separate patents, for instance, and each one of those might be doing separate things. So this sort of graphical planning is very helpful. If you want to set up an IP holding company, you have to get the okay of all the original owners of the parent company. So it's good for a couple of people to work out graphical planning and what is going to happen. But eventually you've got to get the buy-in of all the original IP owners. And a lot of times that's not easy. The next thing is you need to select a trustee. This has happened a lot in some of the holding companies that we've worked with, whereby, all the people in the parent company become all the people in the holding company. And then the holding company litigates, or the acquirer, there's an acquirer that comes by the product company. And the acquirer says, well, we want to have access to all the IP of the holding company, which is only sort of fair thinking. If you think we're buying the parent company and it has this license, but we want to buy the patents. We don't want to have, a license to this holding company. And it would be very difficult if all the members of the holding company were the same members of the parent company, because the acquirer would see that they could leverage the discussions that all the people are really the same. So it's really, they're still dealing with one entity, as if it's just a product company with their IP. But if there was somebody independent from the parent company, I'll call that person a trustee, a manager, who has absolutely no reason to side with the parent company. The only reason that trustee has is to side with the value of the holding company. And many times selling the holding company along with the parent company, if the patent is in, 20 markets, but the parent company is only in one, there's no reason why the holding company would want to sell its patents so the acquirer of the parent company can get access to everything. So a trustee is really important to set that up. And I talk about a trustee, it can be just a manager, managing director, but it really is a person that has the trust of the parent company, but also the trust acting independently of the holding company. Another thing is deciding and setting up an IP holding company. What IP do you want to include? You don't have to include all the IP of the product company. You can include some patents, some trade secrets, or all of it. You can include going forward inventions of the parent company would be owned by the holding company. So there's a lot of sort of chess piece is there to decide what to do. And generally, it's sort of thought about by a lot of people that it's just all the patents that I own go in the holding company, and that's not true. It doesn't have to be. Another thing in setting up the holding company is to figure out if it makes sense from an economic standpoint. So one should crank through sort of the potential licenses they could get and think about the fees and the fees it could get, because the fees in licensing or litigation fee results go into the holding company to keep it running. The holding company is going to have expenses, patent expenses, lawyer expenses, maintenance fees, etc. So it has to sort of stand on its own financially. So if at the end of the day, it can stand on its own financially, and if at the end of the day, it can make enough money, and at the end of the day, some of that money goes back to the owners of the parent company, and that's enough for exciting the parent company beyond the strategic advantage, the financial benefit of a holding company may make a lot of sense. Another thing about setting up the holding company is us figuring out the field of uses. Like I said, many times patents have many fields of uses. And is the holding company going to explore all those fields of uses or some? For instance, does it license exclusively back to the product company for their field of use, and is allowed to then monetize all the other field of uses? So there's a lot of games that you can play there. Another big thing about setting up a IP holding company is have a business charter. That is to say, just like any business, you have sort of an operating company charter. And it's really important to take all the things we talked about and turn it into some prose as a business plan, if you will. And then the thing is to take a look at the IP before it's transferred to make sure that the IP really is going to be valuable. It's not just doing a patent valuation. Are these patents, is there evidence of use? Somebody else is using them. So it's good to sort of evaluate the early patents instead of going in the holding company to see if by themselves they're valuable. So the next thing is setting up an IP holding company, choosing a name. It's best to really choose a name, obviously, that is exciting for you to be involved, but you don't want to choose an aggressive name, I don't think, because eventually a judge and a jury and a plaintiff and a defendant have to read, the legal, lawsuit. And if you have a very aggressive name that's going to be used, it might go against you. So I'd have sort of a win-win kind of name. And lastly, on setting up a holding company is really finding an expert. There's just an awful lot of things to think about and to do, and I've just given you just a very highlighted version. So picking an expert is really important. So coming up in our next section, we're going to take a closer look at the multifaceted benefits of a holding company and its potential pitfalls to avoid. We'll explore how IP holding company structures can streamline R&D, help you raise capital. However, we'll also discuss the critical challenges from securing buy-in from the IP owners and all the risks that are involved. So whether you're looking to leverage IP for mergers, managing your patents, or looking at licensing strategies or monetization, this episode will help equip you with those key insights. So stay tuned. So let's talk about in topic number 3, the benefits in an IP holding company. And I'm going to mention some of the benefits, but there certainly are many, many more. But one of the big ones is you're isolating R&D in the product company so that it doesn't have to start worrying about patents and so on. You may have a requirement between the holding company and the product company that the IP holding company every 6 months comes in to the parent company, interviews inventors and see if there's new inventions, etc. But basically, one of the key aspects is that it isolates R&D, allowing the product company, the parent company, to do its better job without worrying about patents at the same time. And they can be, managed separately. Another thing about the benefits is that it's really very useful to do this at the right stage of capital raises. IP holding companies come up a lot. And sometimes the advice that I would give a client when they say they're going to do a raise and they have lots of patents in their portfolio, say 20, 30, 40. And some of the patents cover the products, but some of the patents cover future directions in other markets. And I discussed with the CEO, your portfolio that you have covers lots more things than your product company is doing. But when you get acquired or somebody's going to invest in you, not only are they investing in the product company in its direction and the patents that cover that product direction, but they're getting almost for free the patents that are in different product directions or different markets. So why would you do that? Well, you created these patents in multiple markets and multiple applications, but the products are only being covered by some of the patents. So what about the rest of the patents? So it's kind of important to think about it that way. So you can tell the original investors, if we spend some money setting up a holding company, putting the patents that we don't need there, then when anybody wants to do another raise in the initial company, the parent company, they're only putting money into those, say, half a dozen patents. But the other 15, 20, 30 patents are in the holding company, and that second level of raise doesn't have, doesn't get access to them. And that's important because the valuation is of the company and the patents covering its market, but not the valuation of these patents in other markets or other applications. So it's really important in a capital raise to do this before the capital raise. Another benefit is what I'd call streamlined IP enforcement, meaning that patent owners can centralize in the holding company their legal actions and not collude or change or disrupt the parent company. That's a key reason, a key benefit of the IP holding company. Another key reason is sort of transfer pricing. That is that the IP holding company allows the patent owners to implement transfer pricing strategies sort of across borders, across geographies. They can deal with international tax regulations and tax liabilities. So it's the IP holding company that would do all that complicated stuff and not the product company. So again, it takes that level of confusion and work out of it. Another thing is that the benefits of an IP holding company are great for mergers and acquisitions. Any company buying a parent company with its patents wants all of them. As mentioned earlier, if we can separate those out, it won't get them. And by the way, it sets up a great double valuation, meaning the valuation of the parent company. And if that acquired company does want the patents in the other market, they have to pay separately and to the IP holding company. So it's a way of like getting paid twice. Another benefit of an IP holding company is the branding that it allows for. And I've seen this before, that an IP holding company can't be countersued, but an IP holding company is connected to the parent company by their owners. So anybody doing due diligence would find out that your parent company might be connected to this IP holding company that can then sue people without getting countersued. So it gives some strength to a small product company to have an IP holding company, because it's kind of like this battleship sitting offshore that can be called at any time to protect the product company, but there's nothing that can be done to the holding company. Another benefit to an IP holding company is that you can do much better in creating the customized licensing models. So an IP holding company is not restricted by, all the relationships that the product or the parent company has. So it can clearly craft more creative, customized licenses. So it can, for instance, charge a different royalty rate in a different market versus in the market the product company's in, which might be hard for the product company if it was doing charge different royalty rates, because the royalty rates are generally created by the market entry of the product company. So It allows you to have different royalty rates. It allows you to license different portions of IP in the IP holding company without overlapping product IP, etc. So there's just a lot more, variability and creativity you can apply. Another thing about a holding company is that it really does enhance strategic planning, because when you put IP in the holding company, the product company now knows that it has this connection to the holding company, so it can call the holding company in to help. But it also knows the holding company is going to be out there monetizing, and revenues can come back from the monetization into the product company, which will make the product company or parent company be even better, more leveraged. And the last thing is that the holding company reduces operational risks. As mentioned, all the things that are done with the patents are done in the holding company, so that the product company, parent company, won't have those operational risks. Okay, topic number 4, things to watch out for. So the first thing to watch out for is the initial starting point, is making sure that you get buy-in from the original IP owners. Could be investors, it could be the inventors, it could be the people that are designing the products and thinking they can get the benefit from the patents, where the relationship might change in a holding company. So it's really good to get a very clean slate, to get anybody that has ownership or investment from the patents get buy-in. Then once that's done, then one of the things that I found that doesn't get done well is that people might get the buy-in, but then it's really important to figure out, are these patents really useful? Are they really strong? Can they really be licensed or litigated? And you go through this whole exercise and find out that the patents are weak. So it's really important to do things like inventing around the patents or doing evidence of use, to make sure that if you're going to take the step of kicking off an IP holding company, that the IP is strong. Another thing to watch out for is sort of the impact on stakeholders, meaning that there's more stakeholders than just investors and management and the parent company. There's customers, there's vendors, there's maybe existing licensees. What does it mean when you're going to set up a holding company? Well, to a customer, it may mean a whole bunch, because now the customer has leverage over the parent company by buying products from it. So therefore, if the product company has patents, the customer still has leverage. But if all the patents are in a holding company, the customer has no leverage over that. So basically what could happen is it could set up some conflicts between customers and the parent company. So the IP holding company really does have an impact on other stakeholders, and it has to be thought about clearly. Another thing to watch out for, and I've seen this, is that you set up the IP holding company, but you set it up with lawyers that have never set up an IP holding company. If you have an IP expert attorney, that's very useful. If you have an IP expert attorney that has done licensing, that's even more useful. If you have an IP attorney that has licensing and litigation experience, that's even more useful. If you have an attorney that has contract experience to set up contracts, even more useful. But it's very rare to have all of that in one head. So it's really important to have really good legal experience for maybe the lawyers who have set up IP holding companies, and it's rare to find them. So one of the things that are many times done wrong is they don't think about all the things that a really good lawyer that knows IP holding companies would think about. So that's really important. I mean, you wouldn't sue somebody for a civil suit, for maybe someone that handles, real estate transaction law, for instance. Another thing to watch out for is that the IP holding company is going to need in it IP talent. A lot of companies set up the IP holding company finding out that they don't have the talent to do monetization, to do litigation, to do the marketing, to do the expansion of the portfolio. So it's really important that you understand what the charter of the IP holding company is going to be, and figure out if you can hire to it before you spin it out. There's a lot of IP holding companies that are just holding companies by name. They just put the patents in a holding company, kind of hide them, and there's no management of it. So you have to understand the kind of holding company that you'd want to put together and have it properly staffed. Another thing is that a lot of holding companies, when they get started, a big fatal flaw is they don't have a strategy for developing new IP. I mentioned some, simple things, like maybe every 6 months, the holding company comes back to the parent company and interviews, the inventors to see if there's more IP to extract. On the other hand, maybe if you have good enough talent in the IP holding company, you could be continually inventing around and doing continuations and all sorts of things in the holding company. So getting that IP talent is also an important thing, and many times it's missed. Another thing to watch out for in IP holding companies is lack of funds. Just setting it up one time is, with some cash, believe me, you're going to see expenses in the IP holding company. You're going to have, the patents are going to have maintenance fees and maybe office actions for continuations. There could be some, legal help needed if some of the patents are going to be, thought through for litigation. So there's going to be money needed in the holding company. And so thinking through that is going to be very important. And a lot of times the holding companies are set up without a second thought to that. Another thing is that the holding company, a lot of times doesn't get set up to monitor, the use of the IP for licenses, meaning that when you do a license, it's an agreement between the patent owner, in this case, the holding company, and those paying the licensing revenues. Well, somebody has to be checking those licensing revenues every quarter or every year. And so having that infrastructure to check on, license revenue is very important. We've seen in one case, an IP program where it was up to $50 million a year in licenses owed that they weren't even collecting because they were disorganized. So it's an important aspect. Another thing that happens, I think, is another flaw is in setting these holding companies up, is they discuss the patents because they're easy, because they have patent numbers on it, and it's an asset that can be transferred. But many times people don't want to buy or license patents unless they get the trade secrets know-hows with it. So there has to be very careful consideration of what are the trade secrets, documenting the trade secrets, and putting those in the holding company as well. And then finally, the last thing to watch out for is the impact of litigation. Holding companies are notorious for being labeled as patent trolls. And that doesn't have to be if it's set up right. So aggressive litigation strategies might be exactly what you want the IP holding company to do. But then you have to think about the negative impact and the PR. Now, the nice thing is the PR against the holding company, if it's done right, is not going to accept, overlap the parent company. So that's another consideration. Like I said, there are a lot of benefits to an IP holding company, and there's also a lot of things to watch out for. So this is just a handful. So let's go on. So coming up, we're going to talk about the intriguing strategies and the future potential for IP holding companies. From the operating in stealth mode to provide legal, countersuits to enable investors to sort of double dip, to look at all these entities that can help businesses maximize the value with intellectual property. We'll dive into the cutting edge advancements in IP holding companies and how they're now moving to things like blockchain, AI patent valuation, things like fractional ownership of patents, just to name a few. There's a whole world about the future of IP holding companies. So stay tuned. So let's talk about topic number 5, strategies of IP holding companies. Some of the strategies of IP holding companies is that the parent company directs the IP holding company really in stealth mode. Nothing illegal about it. It's just that the parent company could have enough ownership, and that could be written into the contract. For instance, the parent company, if it's going to create the holding company, would have the right to basically require the holding company to litigate in its behalf. It wouldn't be in its behalf because the patents are owned by the holding company. The holding company would have standing. So that's one of the strategies. It's a key strategy. And once again, the holding company can't get countersued because it has no products. The second strategy of the IP holding company is that it can litigate totally without reprisal, meaning there's no countersuits. At most, it might subpoena, the operating agreements and things like that to see the relationship to the parent company, but it can't do anything to the parent company based upon the lawsuit from the holding company. However, anybody could sue anyone about anything. So it's still a possibility that, a defendant with patents could see that and just turn around and do a lot of work to try to sue the original parent company. But at least it's that first level of, mitigating the reprisal. A lot of times, a lot of these patent holding companies are out there where the parent company has no longer produced products, and it's just using the holding company as a monetization path. Another strategy of IP holding company is that it can now focus on monetization rather than focus on product development. So it's a whole different world when you wake up every day and what you're trying to do is figure out how to develop more IP and monetize it versus you wake up every day and have to do that plus, run your product company. One of the interesting strategies is IP holding companies. It allows the investors to sort of double dip or triple dip or whatever, meaning that the investors invested in the parent company. Parent company gets a lot of IP. If I can then take that IP and put it in a holding company with some investment, now what happens is the parent company is going to make its money as it would for its products are being acquired, etc. But now the holding company is also owned by the original investors to some level. So now the investors can get any kind of percent success of the cash that the holding company puts together per year. But then the holding company can create other holding companies, et cetera, et cetera. So the original investors have a way of kind of doing that. Then at the end of the day, if someone wants to acquire the original parent company, then that acquisition might be great for the original investors, but then the acquirer might want all the patents. And so once again, the acquirer is going to have to buy the withholding company. And again, that's a separate negotiation because of our trustee. So that original investor can invest in the parent company. When it wins, it can get asset sharing from the holding company. It could be multiple holding companies, and then it gets to dip again in an acquisition. So there are ways that an investor get 4, 5, 6 times returns because of this. Intellectual property is a very interesting asset, because it's a legal document. Another thing is that of a strategy of an IP holding company is that basically it really helps with this M&A. The acquiring company would love to have access to the patents, so they have standing, so they can assert the patents in their market. But if it's in a holding company and they can't get to it, they may still want the company, but the acquiring company is going to want to try to get the holding company's IP. Now keep in mind, the holding company's IP is in many more markets than the original parent company is, and even potentially more markets than the acquiring company is. So it has more value. So therefore, that's a separate negotiation that could be really quite valuable. Another thing is that the IP holding company really saves the parent company money because the parent company doesn't have to start spending money on all the fees associated with the patents. Another strategy of the IP holding company is that it can be sold, allowing the parent company to make money, as I just mentioned. One of the things is because the holding company can't be countersued, the parent company generally gets away from a countersuit. As I mentioned, this has to be thought through in terms of what might mean to customers, et cetera. But in general, the holding company is a great kind of free ride from being countersued. Another thing about strategies for IP holding companies is that normally when competitors are looking at, say, our parent company, and they're wondering, should we compete with this product company because, we have the similar products? Can this parent company sue us? They look up the parent company, they can't find any patents that are legally owned by the parent company. So they go ahead. What happens is the holding company is invisibly connected to the parent company. And through this contract, the parent company could say, go sue this competitor. So now this competitor gets totally surprised. It's a pretty cool strategy. Another feature of IP holding companies is that they could offer other investors to come and kind of fractionally own the IP holding company, giving investors who like to have sort of IP related deals to have some fractional ownership of that investment. They could even have fractional ownership of one of the portfolios of the holding company. Another area is cryptocurrency for the future here. You could have IP-backed cryptocurrency. The holding company could issue cryptocurrency based upon the value of its patent portfolio. So that'd be kind of cool. And all these things can be done without affecting the parent company. Another thing is that the future of this could be that we have dynamic licensing models based upon changes of the market, changes of sales performance, et cetera. You can be very creative about licensing models. Generally in product companies, it's just some percentage of net sales. But IP holding companies have the ability, because it's their business, to be expert at monetization, to make dynamic licensing models. Another thing is that another way that has a cool future is to, take various patent bundles and put them together for sale. So you could buy patents and put it together with some of the patents in the holding company and sell that new bundle or license it. A product company wouldn't be doing that. The product company would be totally defocused to do that all at the same time. Another thing about holding companies is it's really allows you to have IP insurance and risk mitigation services. In other words, a holding company could show up and literally have an arrangement to say, look, I have these patents that can be countersued across an industry. You take a license with me and you give me a list of the 4 competitors you want me to go after, and I can do that. So sort of the IP holding company kind of could be the muscle regarding the IP in the market. Another thing about the future of the IP holding company is that you can use sort of patent-driven AI research collaboration. So in the future, you get these IP holding companies that they could partner with AI research platforms, and from that research, figure out who to license or litigate to, and then through some automation, set up that whole valuation, and then set up the whole process for monetization. So this becomes like a self-perpetuating IP company, because really patents are paper. The agreements are all contracts, which is all paper. The data for evidence of use and market sizes and things is all researchable. So you can now create an AI engine to have a really hot IP holding company. Another thing is that, and the last thing I'll mention is that we can use sort of the IP holding company as almost a model for sort of IP monetization as a service. Because if the IP holding company becomes really successful, it gets really good at lots of things. Looking at the value of IP, developing more IP, setting up licenses, setting up litigation. That's a huge skill base. And keep in mind that IP is a huge percentage of the world economy. So if you get really good at it, it could be really used as a service to attract other portfolios to come in. And so you can have this sort of almost software as a service kind of model, but it'd be licensing as a service. And I've seen this happen. So, boy, there's a lot of opportunity about the future of IP holding companies. So why don't we wrap up? In the first topic, we talked about what is an IP holding company. If you recall in our discussion, we covered things like how to manage your intellectual property, like patents and trademarks, are often better done in a holding company. We talked about tax optimization, centralized management, monetization opportunities, and we even talked about how you can increase your valuation and provide some flexibility for strategy. So this IP ownership becomes core to the holding company and not in the product company. So there's a lot of benefits there. In topic number 2, we talked about setting up an IP holding company. So we discussed things like, how to evaluate the pros and cons of the portfolio, how to sort of create a graphical plan, how to engage IP owners, how to select a trustee. We talked about deciding which IP to include. We talked about researching licensing fees and all those things, even choosing a name. So there's a lot of things you want to do in setting up an IP holding company. So in topic number 3, we talked about the benefits of an IP holding company. So we discussed things like isolation from R&D, getting rid of the day-to-day operation not associated with the patent monetization. We talked about how it helps capital raises directly. We talked about how it streamlines focusing on IP enforcement and legal actions. We talked about how it's really beneficial for global expansion of the portfolio, how it's better for merger and acquisitions, how it can be better for controlling branding. And we even talked about how it can support sort of this reduction of operational risk. So there's a lot of benefits here to an IP holding company for the original parent company and for itself. We also talked about in topic number 4, things to watch out for in IP holding companies. So things like ensuring you get buy-in from the original IP owners, and conducting really good due diligence on the portfolio, and understanding the impact of IP ownership on all the other stakeholders like customers and things like that. And making sure that you hire the right professionals and get the expertise to help you, because just hiring a basic attorney to write up a holding company is probably going to have fraught with lots of cost and time and energy, and even maybe make some mistakes. We also talked about some things to watch out for things like making sure it had sufficient funds, and how to monitor licenses, and also how to manage the risk litigation to protect the product company. In topic number 5, we talked about strategies for the IP holding company. So we talked about various things like the stealth mode, how the connection between the parent company and the IP holding company is stealth. We also talked about, getting, lack of reprisals as a very focused strength of the IP holding company. We talked about, allowing investors to double dip, triple dip, and all that. We talked about the value to the holding company and the investors in an M&A. We also talked about using the IP holding company as a way that the parent company can direct countersuits, or to use it to help it, in a stealth mode. So there's a lot of sort of strategies of the IP holding companies helping the original parent company. And finally, we talked about the future of the IP holding companies. Things like the introduction of blockchain can help it manage and streamline. Things like using AI to do patent valuation in real time. Things like fractional ownership using cryptocurrency, dynamic licensing, talking about how to bundle assets as licensing and monetization solutions, talked about IP insurance, and we even talked about the sort of subscription-based licensing as a service expertise. So there's certainly a bright future for IP holding companies. So look, I've hoped you've enjoyed, listening to this. If you're going to set up an IP holding company or want to know what it is, there's a lot of information here. There's not a lot of information out there on IP holding companies, so I hope this kind of helps. So if you like this, please subscribe and come join our blog, Invent Anything. And if you have some time, come join us and listen to our new series, Inventors at Work. This is John Cronin, Invent Anything.